Question 451. The Veterans Administration does not make loans. Instead, it loans make by an approved institutional lender. A. Finances. B. Assigns. C. Guarantees. D. Recovers. Correct answer is C. Guarantees. The Veterans Administration, VA, does not directly lend money for home purchases. Instead, they guarantee a portion of the loan made by a private lender, such as a bank or credit union. This guarantee protects the lender in case the borrower defaults on the loan. The VA does not set a cap on how much eligible veterans can borrow to finance their home. There are, though, limits on the degree of liability the VA will assume, which impacts the amount of the loan that an institution will approve. Question 452. Dave promises that he will give Sam dinner every night if Sam promises to come over every morning and walk Dave's dog, to which Sam agrees. Dave and Sam have a bilateral contract, B. Unilateral contract, C. Agreement to contract, D. Option contract. Correct answer is A. Bilateral contract. A unilateral contract involves a promise by one party in exchange for the performance of an act by the other party. Here, both Dave and Sam make promises, so it's not unilateral. Agreement to contract refers to a preliminary agreement to negotiate a future contract. It doesn't involve the exchange of promises that creates a binding contract. An option contract gives one party the right, but not the obligation, to buy something from another party within a specific time frame. This scenario doesn't involve an option to buy anything. Bilateral contract is a type of contract where both parties make promises to each other. In this case, Dave promises dinner every night, and Sam promises to walk the dog every morning. Both parties have obligations and both receive something of value. A bilateral contract is formed because both Dave and Sam make promises to each other, creating mutual obligations and a binding agreement. Question 453. An agency relationship is established by the following, except A. Ratification, B. Agreement, C. Estoppel, D. Title report. Correct answer is D. Title report. Ratification is when a principal approves an act performed by someone else, the agent, on their behalf, even if there wasn't prior authorization. Ratification can establish an agency relationship. An agreement between the principal and the agent outlining the scope of the agency is a key element of establishing an agency relationship. Estoppel is a legal doctrine prevents someone from denying something they previously indicated through their words or actions. In agency law, estoppel can apply if a principal's conduct leads a third party to believe someone is their agent, creating an agency relationship by implication. A title report is a document that researches the ownership history of a property and identifies any potential liens or encumbrances. While a title report is important in real estate transactions, it doesn't directly establish an agency relationship. Question 454. All of the following about an estate for years is true, except it. A. Automatically terminates when the lease term expires, with no notice required from either party. B. Must have a term lasting at least a year. C. Must have a fixed term. D. It can only be established by express agreement. Correct answer is B. Must have a term lasting at least a year. An estate for years is a leasehold with a predetermined duration, lasting any length of time, not necessarily a full year. This fixed-term lease distinguishes it from other leaseholds with less defined terms. Unlike common misconceptions, the duration can be as short as days or weeks. This type of lease has a specific start and end date, automatically terminating at the end of its predetermined term. Due to this fixed duration, an estate for years requires a clear, explicit agreement, typically a written lease, to establish its terms. Therefore, the statement claiming an estate for years must last a minimum of 1 year is the only inaccurate assertion. Question 455. Joe bought a building for $550,000. The yearly net income produced by the building is $65,000. Calculate the rate of return for Joe. A. 0, 15. B. 1.18%. C. 11.82%. D. The rate of return cannot be calculated from the question. Correct answer is C. 11.82%. Here's how to calculate the rate of return, also known as the capitalization rate or cap rate in real estate. Formula: rate of return, cap rate, equals net operating income, NOI, purchase price. Applying the values: NOI equals $65,000. Purchase price equals $550,000. Calculation: $65,000 per $550,000 equals 0.118181. Converting to percentage: 0.118181 x 100% equals 11.8181%. Rounding: approximately 11.82%. Therefore, Joe's rate of return on the building is approximately 11.82%. Question 456. In 1968, the United States Supreme Court decided a case regarding fair and open housing, which upheld the Civil Rights Act passed by Congress in A. 1964, B. 1941, C. 1866, D. 1850. Correct answer is A. 1964. Civil Rights Act of 1866 passed shortly after the Civil War, prohibited racial discrimination in property rights. The Civil Rights Act of 1964 was passed by Congress on July 2, 1964, and signed into law by President Lyndon B. Johnson shortly after. The act is considered a landmark civil rights and labor law in the United States, and is considered one of the most significant legislative achievements in American history. The act prohibits discrimination based on race, color, religion, sex, and national origin. In the 1968 case, Jones v. Mayer, the court held that federal law bars all racial discrimination, private or public, in the sale or rental of real property. Jones v. Alfred H. Mayer Company, 1968. In this case, the Supreme Court ruled that the 1866 Act barred all racial discrimination in the sale or rental of property, whether private or public. Therefore, while the 1964 Act is significant, the 1866 Act was the specific law upheld in the 1968 Jones v. Mayer ruling. Question 457. Private restrictions on land use may be established by A. Written agreement, B. Private land use controls, C. Subdivision general plan restrictions, D. All of the above. Correct answer is D. All of the above. Written agreement could be in the form of a servitude agreement between two or more property owners, where one property benefits from a limitation placed on the other property's use. For example, a servitude might grant an easement for access across a neighboring property. Private land use controls can be established through restrictive covenants, which are limitations on property use written into deeds or other property documents. Restrictive covenants are often used in subdivisions to maintain consistency and property values. For example, a covenant might specify minimum square footage requirements for new homes in the subdivision. Subdivision general plan restrictions. While general plans are typically public documents outlining development goals for a broader area, some subdivisions might have their own internal general plan that sets forth restrictions specific to the subdivision. These restrictions could be considered a form of private land use control. Question 458. The kind of mortgage requiring no loan payments by the owners while remaining in the house is called an A. Reverse mortgage, B. Live-in loan, C. ARM, D. No such mortgage exists. Payments must continue to be made throughout the life of a loan. Correct answer is A. Reverse mortgage. Reverse mortgage. A reverse mortgage allows homeowners aged 62 or older to convert a portion of their home equity into cash. Unlike a traditional mortgage, the borrower does not make monthly payments. Instead, the loan balance increases over time as interest and fees accrue. The loan is typically repaid when the homeowner sells the home, moves out, or passes away. Question 459. If the president of a corporation signs a listing agreement on behalf of the corporation with a broker, and the president dies a month later before a property is procured, the listing is A. Invalidated, B. Suspended until a new president is chosen, C. Valid, D. Voidable. Correct answer is C. Valid. A corporation is a separate legal entity, distinct from its individual officers or shareholders. Contracts entered into by the corporation, through its authorized representatives, remain valid even if those individuals change. The listing agreement is between the broker and the corporation, not the individual president. Therefore, the president's death does not invalidate the agreement. The corporation might need to appoint a new representative to handle the sale. The corporation's obligations under the listing agreement continue unless other conditions for termination are met, e.g., expiration of the listing period, mutual agreement to cancel. Question 460. Taxpayers can exclude up to $250,000 of the gain on the sale of their principal residence if they can meet the following requirements. A. Owned the home for at least 2 years, B. Lived in the home as their main home for at least 2 years. C. During the 2-year period ending on the date of the sale, did not exclude gain from the sale of another home, D. All of the above. Correct answer is D. All of the above. To qualify for the capital gains exclusion on the sale of a principal residence, taxpayers must meet all of the following requirements. 1. Owned the home for at least 2 years. The taxpayer must have owned the property for at least 24 months. 2. Lived in the home as their main home for at least 2 years. The property must have been the taxpayer's main residence for at least 24 months during the 5-year period ending on the sale date. 3. During the 2-year period ending on the date of the sale, did not exclude gain from the sale of another home. The taxpayer cannot have used the capital gains exclusion on another property sale within the 2-year period before selling their current principal residence.